Good morning, ladies and gentlemen. Very early morning for you. I know that a lot of you come from Europe, and it's now very early in the morning over there, but I see that everybody is all ready for this session. Let me first by thanking the organizer for inviting me to chair this session. My name is David Lee, and this session, as you know, will be on the future of finance. Over the last few years, the financial system which governs and manages the practice of deposits, lending, and payments is in a mode of disruption following the shortcoming of the current regime. So despite more than about 11 trillion US dollar in quantitative easing since 2007, economic growth has been persistently sluggish. The money isn't going where it should be. In 2015, McKinsey reported that the global debt has grown by 57 trillion US dollars since 2007. The debt is becoming unsustainable. Yet, the global debt-to-income ratio continues to rise disproportionately to any deleveraging. The Fed's signaling to nudge up interest rates beyond the near-zero range raises concerns that private and even public debt could become unserviceable, reeling the economy back to serious recession. So this is all bad for economic growth. Unemployment in the long term is still at a very high level. Consolidation means less competition and concentration of financial power. The resulting combination of great rent-seeking and economic fragility puts pressure on governments to underwrite banks' lending practices, which further distorts the financial system. This is all made worse by widespread uncertainty, which favors hedging activity versus real investment. And we can see that a lot of real assets have risen in prices, and all of this perpetuates income inequality and begs the question, to whom does the global financial industry serve? So with that as a backdrop, we have a very esteemed panel today to discuss a few issues. One of the most important issues is what we can learn from the history of the financial development that we have till today. The second issue is how the new changes, especially the disruption and the financial innovation that we have now, improve the service of the financial sector. And more importantly, how do we see the future and who are we going to serve? So with me today, we have a very distinguished panel. And on my left is Bertrand Badré. He's a visiting fellow from the Peterson Institute for International Economics. And he has a company called Blue Orange Capital that he's just set up. And his CV is very long, so I won't bore you. You can read it from the handout that you have. And he is also the former managing director of the World Bank and the chief executive of the new company he set up. On my right is Professor André Cartapanis. And I know that there's a famous writer called Victor Hugo. And he has this very famous quote. He said, "To learn to read is to light a fire." And for non-French, to learn to read French is to light a fire. It is very dangerous for me to do so. And looking at the professor, who is actually from a university, I will not read out his affiliation, but to say that professor is an expert in international stability. He has written a lot of papers, hundreds of them in top tier 1 journals that a lot of academics can only dream to publish in those journals. And we are so glad to have you on panel today. On my left, further left, is Mohammed Islam. He's the senior economist for Asia Pacific, Euler Hermes. He has been in Hong Kong for 1.5 years, and on my right, I couldn't see you on the other side, I'm sorry about that. Okay, on my right, next to Professor, is Mohammed Islam, and he's based in Hong Kong. He's been there for 1.5 years, And he reminded me that whenever someone in Asia look at the word Hermes, they think about Birkin's bag. But that's not the case. Actually, it's this subsidiary of the Alliance Group that he's attached with, and he's into research for supply chain financing. And we're very glad to have you on the panel today to talk about some of the risks of debts in this part of the world. And on my left, now I'm going to be very bit careful. I can see you there. Is Sudhir Pai. He's the Chief Technology Officer, Global Financial Services from Capgemini. And I'm personally a fan of Capgemini. I read most of the reports that they have. They're the thought leader in transformation and in financial technology. So we're so glad to have you here today to discuss about the changes that will bring about by financial technology and to share with us how the world is going to change in servicing a lot of people who have never been served before. And further on my left is Alain Pithon. He's a General Manager of Pôle Finance Innovation. And looking at the handout that I have seen, the description of you, you are involved not only in investing in financial technology, but you're involved in helping them to grow. And that is something that is very interesting. And we just had a FinTech Festival last week in Singapore, organized by the Central Bank. And that is one area that in this part of the world that we are very interested in looking at FinTech and how that can be changing how financial services is going into the future. So the format today is a very simple format. It's very simple for me as a chairman, that we all will have 5 to 7 minutes of intervention, followed by question and answer among ourselves. I will ask some questions from what they have presented, and then I'll open to the floor for question. So with that, perhaps I will start with my presentation to set the agenda for the day. I'm going to talk about 12 points very quickly in the next 5 to 7 minutes. Let me go to the first point, the megatrends and the new alternatives. And information technology and mobile connectivity has changed everything. And how technology has shifted consumer preferences and opened new doors for greater competition is something that we should focus on and perhaps to discuss later in the panel. The second point is digital implication. Empowered by technology, consumers demand ever higher levels of responsiveness, immediacy, convenience, and customization. They expect instantaneous access to information, entertainment, and services. As a result, market segments are becoming increasingly fractured. This is happening at all levels of consumer affluence. And for this point, considerations is about surviving the disruption, especially for financial institutions, and managing the network in a hyper-connected world. So it's about the new digital world that we have, whether finance is going to be a pillar or finance is going to be buried in the entire digital world with Internet of Things, with logistics, with drones, with connectivity. And the third point is historical context that we need to look at. The evolution of finance has followed a clear progression. Firms first deployed technological advancement, such as credit and payments, to improve customer stickiness and satisfaction. Once network effects take hold, companies consolidate and become more monopolistic, while simultaneously being reined in by regulation. So by having the same group of customers being very sticky, and we start having higher compliance costs going forward. The fourth point is e-commerce and P2P, peer-to-peer. New entrants from outside the traditional banking payment space respond to the emergence of internet-based commerce, demands for new methods of payment. So the payments methods were going to change in the future. The fifth point is the rise of m-commerce. We have seen that with eBay, Alibaba, Lazada, and so on, that we see that everything has moved from physical trade to virtual trade. And the sixth point is weapons of mass consumption. We know that cash is expensive to manage, and access to digital payments network unlocks new markets and increase the velocity of money. So here, new means of payment are leading to innovative new business models. And these business models are to have sticky customer on the internet. The 7th point is banking 2.0, which is an inclusive business model. It's about growth by inclusion rather by growth by leverage, which what we have been using to. So there's a new frontier in banking, which I think the traditional bank have a lot of difficulties catching up in this area. The 8th point that perhaps we can focus on is understanding the new model, which is basically usually is low margin, very asset light, scalable, innovative, and compliance easy. So those are the points that will allow companies to scale very quickly and have a large base of sticky customer like Alipay, with 800 million to 1 billion people using the app that they have. The 9th point is democratization of banking and finance. So technology is making centralized organization obsolete. This has the potential to erode and entrench financial powers and better distribute both risk and reward. So decentralization is the trend. Okay, my time is up, so I'm just going to use the next 30 seconds. The 10th point is incumbents. Amongst incumbents, there's a shift in thinking towards transforming the legacy networks and partnership into more open and inclusive system. The 11th point is cryptocurrency and blockchain. I think you have heard a lot about that, about blockchain and cryptocurrency. And the final point is the fintech promise, whether the new technology is able to serve the 61% of the people without banking account, and also the 70% of the people who are underserved by the financial system. So with that, I will end my presentation. And now I shall invite Bertrand, Badré, to do his intervention.
Thank you very much, Professor Lee. So the question raised this morning, I think it's an interesting way to digest the breakfast, is what is the future of finance? And I think it's a critical question at a critical moment. I mean, we've been discussing at length yesterday the situation today. This was expressed to us by Deputy Prime Minister Tarman. We expressed brilliantly by our ambassador here. We are skating on very thin ice. I mean, we have political, economic, social tensions, all this in the context of geopolitical uncertainty. And in this context, finance, I would say, along with globalization and trade, is perceived, to say the least, as one major irritant in the system, or to be a little bit more excessive, as one of the horsemen of apocalypse. So people are still not at ease with finance. And may I remind you in this room, in particular for the French people, that our president has been elected in France by saying, I have an enemy, finance, a faceless enemy. So that's where we are. So I think it's time to discuss what we want to do next with finance, after what we've been through in the past 10 years. I've spent, and I didn't want to make this a commercial exercise, so I didn't bring my book on stage, but I've spent the past 8 months to think about this and to discuss. I mean, finance has been guilty of many different things, but what if finance could also help save the world? So it's not totally obvious for common wisdom. But common wisdom say a very interesting thing. They say money is a very poor master and is a great servant. So I think we have to come back to the basics. We have to realize that the global financial crisis was really about finance and money being a very, very poor master. It was about finance totally uncontrolled. I mean, we have let a genius out of the bottle. I mean, what was the interest for the world of a CDO square? Let me put it this way. I mean, we built trillions of CDO square of zero interest for anybody except few traders. So this is really what happened. No control, no way, no compass. And of course, this collapsed. This was a crisis of innovation. This was also a crisis of regulation. This was a crisis also of globalization. And it was more importantly a crisis of behavior and accountability. I think this is what really was a big miss. As a consequence, and we discussed this at length yesterday, I think trust has diminished in the system. And we know that we need trust. I mean, there is no democratic society which can survive without a minimum of trust. And there is no market economy that can survive without a minimum of trust. That is important. And it's not only finance. I mean, if you add to this the Dieselgate and the Panama Papers and all these things. So the absolute level of trust in the system has diminished. And that's what we are facing today. And that's why finance, along with the trade globalization, is fair and not considered totally reliable today. And again, we have created this tension, and I like to remind people usually of what happened precisely in 2008. At that time, July 08, August 08 in France, so just before the Lehman bankruptcy, what was a topic of conversation in the French media at that time? It was a minimum income proposed by then Minister Martin Hirsch. And the conversation was whether we should allocate in the budget 500 or 600 million euro for that experiment. Come Lehman bankruptcy, in 2 weeks, the plan to rescue the system was announced, 420 billion euro. And then I've spent a lot of time, I was at Crédit Agricole that time circulating in France, and people say, okay, we cannot find 1 billion for the poor in a month, and then for the banks, we find 420 billion euro in 2 weeks. And when I made these comments in the US, people say, it was the same with the Paulson and the TAR plan. We could find 700 billion overnight for Wall Street, let me put it this way, and we couldn't do anything. What's in it for me? So we have created this impossible tension, which has resulted, I suppose, part of this in the last elections. People did not understand what happened. So they have the feeling that in this system, we have rescued the rich and powerful to the detriment of the others. So what have we done since? We have repaired the system. The good news is that we still can go to an ATM machine and get the money. We still can buy bread at the bakery. That is okay. But we have not fixed the system. The system was set in fire. To kill the fire, we organized, thanks to the central bank, and I think it was necessary, we organized a flood, the excess of liquidity. So the good news is that the house is still standing. The bad news, I think, is the foundation, the walls are a little bit cracked. And so what do we need to do today? I think the urgency is to think about the new system. We were smart enough in 1944, 1945, with the Bretton Woods and everything that goes together to kind of take the conclusion of the 1929 crisis in the Second World War. I think, I don't want to make that comparison as tragic, but I think we are at the end of a system and we have to think the system of after. I don't have a solution. I don't have the solution, but I think we need to think about it. We need a holistic approach. How do we want to finance our economy? It was a debt crisis, and still, as you say, we are more indebted today than we were 10 years ago. So I think this is a problem. What role do we want debt versus equity to play? What role would you want the banks versus the market to play? How do we want the banks to be profitable? Is a bank a distribution, a utility, a credit utility, or is it a bank? I don't know. We never address this question. So it's all the more important that the needs, the financial needs remains enormous. We agreed on sustainable development goals. We agreed on climate commitments. The needs are in trillions. We don't have the money. So we need to reset the system. And it's difficult because most actors are still totally unaware of where to go. If I take them rapidly one by one, the public purses are under pressure more or less everywhere. Maybe not in Singapore, but more or less everywhere. Institutional investors, we discussed that yesterday. They are scared to death by the low rates. Yes, I'm sorry, I will accelerate, but I will not shorten. So institutional investors are scared by the rate environment. The banks, as Philippe said yesterday, they are scared by the fintech, as you said. They are scared by the regulation. They're also scared by the rates. The multilateral world, is also scared because multilateralism is less of the fashion of the day today, and so on and so forth. Except maybe with China and AIIB here in this region. So we really have to think hard about how to kind of rebuild this system with a difficult environment, with actors which don't know where to go. So how do we move in a world where basically we are in mostly uncharted territories? We never experienced negative rates at that scale. We never experienced passive investment at that scale. We never experienced even robot management. We might discuss that. We never experiment all these uncharted territories opened by monetary policy. So my conclusion is that we will not go anywhere if we don't acknowledge the issue, recognize its importance, give it a name, and engage in discussion at all levels. At the regulators level, obviously, but regulation cannot be an excuse for not doing the rest. It must be engaged in every financial firm. What is my job in this world? Every multinational, every SME, and each of us as consumers, investors, intermediaries, savers, etc., we need to discuss the products, the markets. We need to discuss what accountability means, the reporting, the disclosure, and so on and so forth. I think it's critical if we want to make finance a great servant again. And that's my final point. This is really my commercial page, not about the book, but about Blue Orange Capital. I had this conversation with a CEO of a life insurance company in Europe who told me, today the system is hardwired in a way that every week I'm buying millions of euro, yen, Swiss franc of negative rate bonds. This is totally crazy. It doesn't help the issuer because these guys have free money, so they have no incentive to do the reform. It doesn't help my clients because with negative rates, I cannot pay them. It doesn't help the world. So if we cannot find a system through which part of the money is channeled in, let's say, housing in India, energy in Africa, agriculture in Latin America, where the needs are enormous, where 3 billion people will join us in the next 20, 30 years, I mean, we have a real problem. It's a suicide for advanced economy if we cannot get out of this rapidly. Thank you very much.
Thank you, Bertrand. It was very interesting about the ecosystem and the collaboration among different parties, and that perhaps we can talk a little bit more about decentralization, because it's always about regulators versus the institution and the other way. Now we can move on to international stability then, to Professor Cartapanis, that maybe you can enlighten us on how that can change the world as well.
Merci, Monsieur le Président. Alors la question qui nous a été soumise est évidemment assez large. Quel est l'avenir de la finance? Et il y a de multiples angles d'attaque qui peuvent être retenus. Et je vais pour ma part me situer d'abord sur le plan macroéconomique et également sous l'angle global, en particulier s'agissant de ce que l'on peut attendre dans l'avenir du traitement des mouvements internationaux de capitaux. Le point de départ de mon propos est de dire que tout porte à penser que la finance de demain ne ressemblera pas à celle que nous avons connue avant la crise. Parce que cette crise a révélé un certain nombre de failles, de défaillances des marchés, auxquelles on s'est déjà attaqué du point de vue d'un certain nombre de régulations. Alors pour défendre ce point de vue, je voudrais d'abord très vite rappeler ce qu'étaient les effets attendus de mouvements depuis 40 ans, de déréglementation, de libéralisation des marchés et d'ouverture surtout sur la finance globale. On en attendait d'abord une plus grande efficience dans l'allocation de l'épargne ou bien des liquidités disponibles à l'échelle mondiale, en fonction en particulier de ce qu'étaient les dotations des différents types de pays. On en attendait également une modernisation de la finance avec une capacité se faisant à l'intérieur des systèmes financiers de mieux arbitrer entre les investissements de caractère un peu spéculatif et puis les investissements productifs de nature à alimenter la croissance. Donc on en attendait une baisse du coût du capital, un cercle vertueux de l'investissement et de la croissance, en particulier parmi les pays qu'on appelle encore des pays émergents, et on en attendait également une meilleure régulation des chocs à l'intérieur des économies, une capacité à lisser les chocs, notamment par l'atténuation des contraintes de balance des paiements. Les constats que l'on peut dresser aujourd'hui, 40 ans, 30 ans, 20 ans, selon les zones, de cette expérience sont très paradoxaux. Premièrement, la carte des mouvements de capitaux ne correspond absolument pas à ce qui avait été anticipé. S'agissant des flux bruts de capitaux, c'est essentiellement des flux nord-nord. Et s'agissant des flux nets de capitaux, ce sont des flux du sud vers le nord. Deuxièmement, il n'y a pas de relation avérée sur le plan empirique entre la taille de l'ouverture des marchés ou bien de l'ouverture vers l'extérieur dans l'accès à l'épargne, et puis d'un autre côté les taux de croissance. On a cette fameuse étude de Rogoff au Fonds monétaire international qui a eu un certain écho à ce sujet. Et surtout, alors même qu'on attendait plus de liberté en matière de pilotage macroéconomique, on a le sentiment au contraire que les contraintes ont été durcies. Elles ont été durcies parce que les mouvements de capitaux ont été à de nombreuses occasions déséquilibrants, ont été beaucoup plus procycliques que contracycliques, et donc ont créé des ondes de désajustement très difficiles à maîtriser, pouvant aller jusqu'à des crises. Et cela, à nouveau, donc, est très différent des attendus qui avaient été définis au départ. J'ajoute un dernier point du point de vue du bilan, c'est le fait que des études récentes ont montré que la relation entre la taille de la finance, d'un côté, et de notre côté, les gains de productivité ou bien les niveaux de croissance obéissent à une sorte de courbe en U inversée. C'est-à-dire que, dans un premier temps, la finance est efficace, elle conforte les potentialités de développement, parmi les pays développés comme parmi les pays émergents. mais arrive à un certain niveau, arrive un seuil à partir duquel les effets s'inversent. Et il y a au contraire donc une décélération, voire des contraintes nouvelles à la croissance et aux gains de productivité. Alors, comment l'analyser, cette configuration? Eh bien, c'est l'idée que le fameux trilemme de Triffin, le trilemme de Mendel, que nous enseignons, à savoir qu'il suffit d'avoir des taux de change flexibles pour que l'on puisse combiner à la fois une indépendance en matière de politique macroéconomique et puis une ouverture en matière de mouvements de capitaux, eh bien, ce trilemme est obsolète. Et aujourd'hui, de plus en plus d'économistes considèrent qu'il y a un arbitrage à réaliser entre, d'un côté, l'indépendance des politiques macroéconomiques, des politiques monétaires, et de notre côté, la liberté des mouvements de capitaux. Et c'est un petit peu ce qui est en train de se dessiner s'agissant de l'avenir. Je pense que la finance de demain sera beaucoup plus régulée. Elle commence à l'être. Et elle doit l'être beaucoup plus régulée qu'elle ne l'a été jusqu'à présent, et notamment dans le domaine des mouvements internationaux de capitaux. Il y a finalement deux types de modalités, de méthodes qui peuvent être envisagées et qui déjà sont en cours de mise en application. D'abord, c'est le recours aux politiques dites macro-prudentielles. Ce sont des politiques prudentielles qui s'appliquent évidemment aux banques, mais qui tiennent compte de ce que sont les effets systémiques de tel ou tel type de comportement, de tel ou tel type de situation du côté des banques. Et je pense qu'il serait souhaitable que l'on mette beaucoup plus l'accent sur un traitement particulier des mouvements de capitaux, et donc de ce que sont les détentions, ou bien de la part des non-résidents, ou bien lorsqu'il y a des échanges transfrontières, un peu comme on l'a fait par exemple à propos des banques too big to fail, qui sont traitées différemment dans le cadre de la réglementation prudentielle. Eh bien, on pourrait donner un rôle assez particulier également à ce qui se passe du côté des entrées de capitaux, et donc du côté de la circulation de l'épargne ou bien des liquidités. Et le deuxième volet qui me paraît important, c'est la question du contrôle des capitaux. La question du contrôle des capitaux a toujours été perçue de façon un peu binaire. On libéralise, ou bien au contraire, on ferme les frontières. Et de plus en plus d'économistes aujourd'hui considèrent qu'il faut utiliser les contrôles des capitaux de façon discrétionnaire, en présence d'afflux de capitaux qui ne répondent pas aux besoins des pays, mais qui simplement s'apparentent à un déversement d'excès de liquidités parmi les pays développés. Eh bien, il est non seulement légitime, mais tout à fait opportun de mettre en place des dispositifs de contrôle. Contrôle par la fiscalité, contrôle par la réglementation prudentielle, contrôle par les quantités. Parce que ces mouvements de capitaux, non seulement ne sont pas porteurs de façon garantie d'une croissance plus élevée, mais sont porteurs d'effets déséquilibrants. Mais lorsque le contexte ne l'exige pas, eh bien on peut lever ces contrôles des capitaux, et donc il y a une sorte de caractère discrétionnaire qui aujourd'hui d'ailleurs est tout à fait validé dans nombre de travaux menés au Fonds monétaire international. Et donc il me semble, pour conclure, que compte tenu de ce que sont les effets souvent déséquilibrants de cette circulation de l'épargne et des liquidités, eh bien on se dirige dans l'avenir vers une finance mieux régulée, sans doute un peu amincie, de telle manière qu'elle devienne beaucoup plus désormais contracyclique et non pas procyclique, comme on l'a observé dans le passé. Merci.
Thank you very much, Professor. Thank you very much for insightful comments on the fractional reserve system, the breaking down of the productivity and growth. I think those are very important issues, and especially to tighter regulation going into the future. And I think it will be interesting to see how some other system that will bypass regulation and see whether some of those payment system cross-border, how it will evolve over time. So with that, we move on to Mr. Islam, and maybe you can tell us a little bit more from your intervention about financing, debt issues, and maybe this whole supply chain.
What is good is that Bertrand and André addressed my conclusion. So this is good because they have done that really good, really briefly, and this is very good. So first word of introduction. Before this presentation, did you know what is Euler Hermes and exactly what we do? Please raise the hand for yes. Wow. Okay. So first, we are not the fashion brand. So this is the first thing. So I don't have any deals to propose. But we are the world leader in trade credit insurance. So what we do is we protect our clients against the default by their own clients. So basically what we do, we secure transaction. We secure transaction, and today we insure about 900 billion of transaction globally. And more importantly, we are also experts in risk of non-payment. So today I will address 3 points. My first point will be about the risk of non-payment, and because it has impact on the financing system. Second, I will talk about global transactions, because it is related to what you are talking about, globalization and what we have talked about before, and what we see. And third, I will have some conclusion, but these have already been made by my colleagues, so this will be quite rapid. So first of all, when it comes to risk of non-payment, Euler Hermes, we have to monitor risk of non-payment, because it is our core job, and if we don't do it correctly, then we don't get money, and then we don't get bonus. So simple. So we need to make sure that we follow it correctly. So to do so, what we do, we monitor insolvency all around the world. We monitor corporate insolvencies all around the world. And what we have seen during this year is, for the first time since the global financial crisis, we expect a rise of insolvencies globally for corporate. So we expect 1% increase. It's not that big, it's true, but it is a change compared to what happened before. And more importantly, today, when we look at countries, it concerns some big countries. For example, China, we expect an increase of 20%. Last year, it was 24%. So between 2 years, we had an increase of about 50% of insolvencies in this country. The reason were evoked yesterday, for example, it is because of high corporate debt, 160%, 170% of GDP, which is about 18 trillion GDP, which is a humongous. And also lower demand growth, and also some deflationary pressure because of overcapacity. So this is a problem. And more importantly, when you look at corporates, the size of corporate also matter. So it's not just a question of frequency. If you look at what happened since the beginning of the year, we have seen a lot of big cases happening. You have the example of Hanjin in South Korea. You have the example of Hermes. You have the example of Dick Smith in Australia. So now it's not just a question of countries. It is also a question of size of companies. So this is a big different environment, because corporate risk is increasing and is exerting some pressure on finance. So what does that mean for us? Does that mean that we need to shy away? Does that mean that we need to be on defensive mode? Not. No, because we are not in a recession. We are not in a recession. Growth is still there. We expect 2.4% of growth this year. So it's still okay. It's still okay. There are still some opportunities. But the main concern is how we can get them, how one can get these opportunities. And then this is the problem, because one of the big concerns we have today is the global transaction. It's related to global transaction. How does it evolve, and what we can expect for them? The problem of globalization, it is a very buzzword which encompasses many, many, many items. You have global flows of transaction of goods, services, investment, technology. All of them are in this buzzword. And the thing, when you look at the figures, the big point which is missing today is goods. So it's flows of goods. So global trade of goods. If you take the amount of exports of goods in the share of GDP, in 2011 it was about 25%. Now it has decreased to 22%. So that means that there is a slower growth of exports related to GDP growth. So this is a problem for us, especially because we are working on the value chain, so we are financing, the supply chain, so this is a problem for us. But what is interesting is the other flow, they're proving resilient. If you take services, if you take investment, cross-border investment, and also if you take technology, and they are poised to increase. Reason one, services. Most of the emerging markets are becoming more service-based. If you take the example of China, today this is one of the main emphasis of the government. Digitalization, this is also poised to grow because of democratization of internet. And also cross-border investment. This is also interesting because when you look at cross-border investment, you can have one proxy, which is basically the M&A. And when you look at these figures, we see that, for example, it is increasing by about 3% in the first semester compared to last year, which is still above the real GDP growth. That means that there is still some cross-border investment coming, still increasing. There is many reasons for that. Absorption, getting closer to the consumer, because we cannot sell goods to the end consumer because there is a currency risk and higher demand risk, and because countries are becoming more protectionist. So what we do, we invest in the country and then we get closer to the consumer. So this is the trend we see today. So the question is, what does that mean for us and how we can act? How can we adapt to that? There are three kind of implications. The first one is we have to be more globalized. Another buzzword. It's not just about globalization, so we have to think global and act local, and also be more localized and have more local expertise. This is really important because if we want to serve clients, we need to understand what they need, and we need to understand the supply chain. So this is really important. Second thing is the revamping of our risk model. This is a big issue for us. This is a big issue because we are provider of credit. So there is no too big to fail, we have seen that. But there is also no too small to thrive. Now, what is interesting with the digitalization is that you have a lot of micro multinational companies expanding, but we don't have the tool to assess the risk. We don't have the balance sheet, we don't have the experience of payment, and this is something we need to do, because if we have them, then we can help them to grow. So this is something which we are working on, but this is a very long way. This is a long way, because if we want to help this company, we need to improve our tool. And the third one is related to what you said. It's the global coordination between private sector, national authorities, but also international authorities. Because it's not a problem of capital today, it's a problem of capital allocation. The allocation of capital is not going correctly. There is existing capital, but it's not allocated to the right person. You can see that cross countries, this is what you explained before about the capital excess liquidity in the north, lack of liquidity in the south. For example, for the Indonesia of the world, you need liquidity, you need money to, for example, to invest in infrastructure. They need this money. But the problem, the money doesn't come. So there is a need for that, and there is a need for that. You can see also that in a country. For example, the Japan economy is a good one. You have a lot of liquidity which has been supplied to the financing sector, but you don't see any improvement in the real economy. So that's it for my presentation. Thank you.
Thank you, Mahamoud. I think your points are very interesting. First is about, again, international flow. Is there the pain point is about how to have free flow of capital. That's extremely important. Cross-border. I think that's one issue. And you mentioned about data, whether we are too focused on structured data. How do we use the kind of unstructured data that may be available from the mobile phone and so on, that also the regulator maybe need to look at to see whether that can be compliant to international regulation. And with that, we move on to digitization and transformation. And Sandeep, over to you.
Thank you, David. Good morning, everyone. I'm pleased to be here. I think one change I saw today, this panel, is we have to sit and speak. Maybe it's a better way to control the timing. So as part of my role, the advantage I have is I get to interact financial services business, large, small, fintech, across the globe. And I would like to give you perspective and continue to go with the standard approach of 3 points. So I'd like to probably cover 3 points here. So the first one is, let me put a consumer lens. So what is consumer lens on future of finance? Second point is, what would be enterprise lens on future of finance and how enterprises are going to cope up with it? And third, today, we spoke a lot about technology. So being a technologist, let me give my view on what does technology disruption mean and how do we embrace it. So if you start with consumer and future of finance for consumer, I think a lot of opportunities and possibilities, but a simple scenario, maybe not in far future, maybe in very near future is I should be able to do pretty much everything on my smart device, as we all know. I'll be able to chat. You would have heard about chatbots. I'll be able to have a conversation with the bank like I'm having a conversation with my friend. I'll be able to request for a personal finance through the chat. If bank is not offering, I have options to go to a fintech, or bank have option to go to fintech on my behalf to retain me as a customer. My identity is on blockchain, so no hassles. Everyone knows who I am. No more questions asked. I don't have to prove it time and again, and so on and so forth. The analytics behind who I am is known to everybody. What it means is, in this scenario, bank is proactively coming back to me and saying, look, we are not only offering you a loan, but we calculated your repayment schedule and looks like you still afford a holiday this year. And how about you go Disney, because that's your place that you like to go. And bank connects me to Disney bot, and Disney sends me Magic Band, which has everything configured, starting from my rights to my preference, my food, and so on and so forth. So where I'm heading with this example is the future of finance for consumer is a convergence of finance and lifestyle. So finance is part of my lifestyle. So it's not separate. I'm not going to go separately to a bank on a specific product, but it is part of my lifestyle. The second thing you observed here is it's unbundling. Where it is required, I can have, me as a consumer, have a choice to pick whatever I like to pick. And why all these are happening? Because as a consumer, I'm social, I'm connected, I'm always on. And that puts pressure on my second point, which is what does that enterprises have to do? Now observe there are 4 competing sort of pressures when we talk about enterprise. There are those large, big financial institutes who are investing a lot of money on innovation and technology, VC arms, but the challenge is speed and agility for them. There are thousands of fintech, over 10,000 of fintech across the globe, who are smart, who are working on a very niche specific idea, but they have struggled to scale up. There are these large technology companies who are very good in what they do and offering a lot of financial services products. They're not bank, and their product sets are limited. So there are variations. And the last variation is blurring of industries. So I've seen in the recent, probably over the last 6 months, everyone wants to be a bank or a financial institute. So telcos are getting into the play, retailers are getting into the play, as much as airlines are getting into the play. So I live in Australia. I saw Qantas now has a Kudos Bank. So in airport, you can see a branch you can go and do, and all Qantas frequent flyer customers, if I move my housing loan, I'll get few 100,000 points, Qantas frequent flyer points. So the business model in which the things are moving in the future are going to be very different. So that's the consumer lens, enterprise lens. So if you look at technology in itself, there is a lot of technology, a lot of disruption. So how do I know how to embrace, how to approach? So what we have built within Capgemini, and I felt is very useful, is a 4-step process. The first and foremost, in terms of technology, it is all consumer related or customer related. So what we call as channels, right? So how do I improve customer experience? Maybe through mobile, maybe through bots, maybe through new things. So the technology that is supporting customer experience. The second key thing is technologies that support operational efficiency. So often there is a realization that when we talk about digital and when we talk about future, it is not only customer experience and front end, it is a full enterprise. So how do I build operational efficiency, which is coming through the scale, which is coming through cloud, which is coming through robotics, and so on. The third realization on technology is it can be a completely new business model, which has not been thought in the past. I'll give one example. Recently, I came across on IoT. So there is this consortium, which is very unconventional, which has a bank, which has a telco, which has a university, is driving an IoT initiative on smart homes. So smart homes leading to smart cities. Now, everyone knows smart homes, but this is taking one level above. So what's happening here is my home is as much as anybody else in my family, right? It can prompt to take medicines on time. It knows when I'm going for shopping and when I'm back. I can, in fact, plug in my new device, which I just shopped, and that gets automatically added to my content insurance. So to level of granularity that I will know which rooms of the home is not being used, is my street safe where my home is located, and so on and so forth. So those are the driving factor, those are the data which is then influencing the premium I'm paying, then influencing the type of mortgage that I'm going to decide, and so on. So the implication of new business model is very attractive because that has the convergence of customer technology, operations technologies together. So here is what I would conclude, a few things to leave it with you. The first and foremost, my observation is, like I said, convergence of finance and lifestyle, increasingly happening, and it will continue to happen. The second thing is disruption or technology is not going to be one-time phenomenon. So the organization has to be ready to embrace continuously on an ongoing basis. If you're thinking it is one time and I've done with it, that's not going to be the case. Third, we should be ready with unconventional ecosystem partnership. Those who have earlier we were competing, now we are partnering. Or in some situation we compete, some situation we partner. Recently I saw a white paper from one of the big telcos, and the white paper name was Millennials, Mobile and Money. So I was surprised to see why is telco interested so much about money? And they are, because they have mobile and they have millennial as customers. So blurring of industry boundaries are going to increase. So it's not going to be only financial services focusing on financial services. It's going to be an ecosystem. Thank you.
Thank you, Samdip. Thank you very much for highlighting the importance of data. And I just want to say this, that Jack Ma has said that data is the new raw materials that we have. Your computing power is a new productivity. So you just emphasize what he just said, and I think that is very interesting. And Alan, now over to you, more about innovation.
Thank you, Professor Lee. Perhaps just to start by some figures about the capital invested in French tech reached 857 million euro in the third quarter. We are not so far from the UK now, because in the UK at the same period it was 920 million euro, and far ahead of Germany, only 460 million euro at the same period also. Our framework for innovation in France is based upon 3 pillars mainly. Firstly, fiscal structuring, and especially to the regimes which are very efficient, which one the so-called crédit impôt recherche. It means research tax credits, which is very efficient and very competitive regime compared to other regime existing in other countries. There is also a regime which is perhaps not enough well known, which are incentives for corporate venture. It could be also very important to stimulate innovation. The second pillar is from public sector. And one key actor is Public Investment Bank, BPI France. I know that André, one of the leaders of the managers of BPI, will participate in the next roundtable. And BPI France will deploy more than 700 million euro this year for innovation. And of course the third pillar is from the private sector, and perhaps at 2 levels. The first one is development of venture capital, and France once again has a good rank in Europe and in the world, with 1 billion raised in the first half. And the other part is the involvement of the financial institutions in the development of innovation, in the digitalization of the economy, and the support of fintech. For instance, big companies, big financial institutions such as AXA, Société Générale, BNP Paribas set up many initiatives in this area. For instance, they invest in fintech companies, they support some projects, and they buy, of course, solutions from fintech companies. Perhaps a few words about our involvement and our action in this area. Our main tool is Finance Innovation, Pôle Finance Innovation. In English we say probably Finance Innovation Cluster. It's the only one cluster dedicated to finance in France. Was around 70 clusters in France, so it's the only one in finance. It was launched in 2008, and we've of course focused on fintech, on innovation in the financial sector, and also an attention to the articulation between public research and private research in this area. We've in Pôle Finance Innovation, and also in our cluster, we have 3 missions mainly. The first one, and it's of course very important, is the sourcing. It's to select the best and most innovative fintechs. From the beginning, we have identified around 1,000 projects in the sector. So it's very important. The second action is to propose financial tools for innovative SMEs. Of course, the funding of these innovations is very crucial. And the third activity is to drive innovation through a sort of think tank clusters. For instance, we launched the white paper concerning innovation in the banking sector, which is very important for us. And of course, among the topics identified and promoted by Pôle Finance Innovation, by our cluster, there are, of course, payment, there are big data, risk management, and also social and sustainable economy. And perhaps to conclude, some example of the partnership between fintech and financial institution, because we consider it's very important to have a real and strong development of the fintech. For instance, in big data, just to mention MacroNow, which is a collaborative project between QuantCube Technology and Crédit Agricole CIB. And it consists of analyzing in real time data on social networks. It's very, I have visited this startup. It's very impressive. They are working of course, in French, English, but also in Chinese social networks. It's very, very impressive. On artificial intelligence, we have, of course, the commitment of Crédit Mutuel and IBM France. I have to find an example of Société Générale, otherwise Philippe. But of course, we have. For instance, we have also a biometric payment system, for instance, which is Talk to Pay, yes, which is a voice-based payment solution to limit fraud. So many examples of partnership. So it's the end of the period, perhaps, in which there was sort of misunderstanding between big financial institutions and fintech. It's not the situation at the moment. It's real cooperation because it's important for the financial sector. And also, I think it's also in a part of the answer to the question to restore confidence in finance.
Thank you, Alain. Thank you very much. I think very interesting to see that payments is always the beginning. I read in France that 88 billion transaction is through the payments fintech. It's the largest sector in France for the fintech companies. And it's interesting to talk about, what you have talked about, social network banking, like Fido Bank and so on, where I think we are down to the question and answer session. We have heard from the panel members. I think we learned a lot. But to follow up from there is about the future. How do we restore trust in the financial system? We have a parallel system, as you just mentioned. We can use the social network, which is unstructured data, to rely on that. We could look at other transparent data using blockchain. The whole idea is that why can't the financial system be like having a video, a civilian system? So I have a question for Bertrand and André, but how do we restore trust in the financial system, and what can we learn from the history? Maybe we'll start with you, Bertrand.
As we all know by experience, trust vanishes fast and takes a lot of time to rebuild. And I think this is precisely the point where we are. I mean, trust has really gone. When you question people all over the world, and the trust in experts, economists, the financial system, etc., is down to very low level. And it will take a lot of time to restore. It's not just technology. Technology might help, definitely. But it's more than that. It's not just about regulation. It might help as well. But it will take time. It's really about basically restoring accountability in the system, make sure the behaviors follow, etc. So it's for me, it's a really very important work program that has to be started and encompass a lot of actors. So we should not just rely on the blockchain. Say, hey, blockchain is fine. This will solve the. I mean, this is important. It's not just about the regulation in banks. It's okay. It's much more than that. It's made of a lot of soft adjustments, etc. And so it's urgent to start. If we don't address that question of trust, I think there will still be a problem in the system. That is for sure.
That's interesting. So the whole ecosystem have to work together and come to something which is workable to restore trust. Professor, what is your view on that?
Je crois que la confiance est une notion qui est constamment mobilisée, mais qui est très difficile à mettre en application lorsque l'on veut interférer avec les comportements de marché, et notamment du point de vue des transferts de fonds. Moi, je crois qu'il faut le poser en termes d'incitation et de désincitation. On est dans des logiques où les incitations du point de vue de ce que sont les déterminants des transferts de capitaux doivent prévaloir. On n'est pas dans des logiques où les acteurs publics jouent un rôle absolument déterminant. Mais clairement, compte tenu de ce que sont les défaillances de marché, il faut qu'il y ait des désincitations lorsqu'il y a des distorsions qui apparaissent. Et de ce point de vue, même si c'est insuffisant, je crois que c'est par le jeu discrétionnaire des superviseurs et des banques centrales, ou bien par la mise en place de régulations plus affirmées, que l'on pourra maîtriser ce que sont un certain nombre de dysfonctionnements, et donc, ce faisant, eh bien, assurer une plus grande confiance dans ces transferts de fonds.
Thank you, Professor. I think that's interesting, but I want to move on to Mahamoud. And you mentioned about the leverage system as well. We are very leveraged, and if you look at whole system, maybe only 30% of the people get lending in the world. And I come across Alipay everywhere, which I think we talk about social network, that you can now, with the payment, just ask anyone around to come to your place to cook for you. You pay them a sum of money. They can come and take care of your parents, which are disabled at home, and you pay them a sum. We are able to now serve people who are not within the financial system. So what do you think? Can we, the finance, continue to serve the national economy based on the current existing system?
I think yes. The question is no more to understand what is the problem in the system, I think. And there are a lot of problems. You have the macro problem, but also the more micro problems. So we have to understand the needs, of the new clients we have, of the new people we need to serve. And for this, we need really to understand what are the new drivers of the economy. For example, if I give you an example, if tomorrow you want to use digitalization, you can use a digitalization as a mean, but you can also use digitalization as a source of growth. Meaning that, for example, I can have more data through digitalization, so I can get more data. But it can also be a source of growth because there are companies that are using it. The problem is that today there is still a lack of understanding of the business model of this kind of company. For example, if you take the example of one company which exists now, which is May2, for example, the objective of this company is an app which is beautifying you. So this kind of business model is very difficult to understand in the long run. So if you want to lend money to this kind of company, you need to understand what they want to do. So this is from a corporate side. And I think it is the same kind of things for household also. You need to understand what kind of experience they need. Because now people are becoming more exigent. They want more experience. They want to experience things. And the competition is very strong among financial sector. You have many even now manufacturing sector is doing financial services. So we need also to understand what are the needs of the clients to make sure that we use it correctly. Second thing is we need also to raise awareness. We need to raise awareness about what we do. And this kind of conference is really good about that because we can raise awareness about what we do exactly. Innovative finance or also trade credit. For example, I don't know if you know, but 40% of asset of a company is account receivable. So this is something people need to know because if you now want to do business correctly, you need to know that. And because if you get insured, that means that also you can secure a transaction. This was the commercial moment. So this is why I'm saying that it is also a question of knowing what are the needs. And I think the problem we have today is that the world is changing really fast. We don't really understand the need of the people we are serving sometimes. And I can take the blame also from my side as an economist. And this is something we need to learn rapidly, to adapt rapidly to this kind of change, to better serve the people, the people we are working with.
Thank you. And that brings us to what digital finance could do. how can that change the way finance provides services, which is basically what you're talking about? What are new business models? What are we seeing on the ground? Maybe, Alan, you have been dealing with that. What do you see? Is digital finance serving the people? Is changing the economy? What do you see from that?
Of course. Now, may I give you perhaps two examples? For the first one is the impact of, once again, of big data and artificial intelligence. I think it provides a better understanding of the client, of their behavior, of their needs, and not only understanding, but also perhaps to allow fair pricing for our services. So we believe it's important. It's true in the financial, in the banking sector, and also in the insurance sector. The other example is about blockchain. Once again, I'm not a specialist, of course, but just to mention an initiative taken in June by 7 French institutions, BNP Paribas Securities Services, Caisse des Dépôts, Société Générale, Euroclear, Euronext, and Europlus, Pariplus. And we set up a consortium to improve SMEs access. It's important for us, SMEs access to capital markets by facilitating secure and post-trade operation via blockchain technology. So it's, once again, it's an important initiative we observe to set up connections between finance, innovation in finance, and the impact of the rest of the economy.
So from what you are saying is that digitalization may probably bring down costs. You serve a large number of people, so your cost is down to run new business models that serve people that you've never been able to serve before and profitable. And we see telecom company becoming a finance company. We see
good example with Orange.
Yeah, with Telenor, with M-Pesa. We see e-commerce firm like Alibaba becoming finance firm. And then the banks are struggling, the financial institution, including the insurance company. Are they spending resources at the right place? Are they using results? So do you have any comments on that? Are they using results with the kind of lab that they're doing? Are they moving the right direction? Do you see the results from FinTech and InsurTech from the large financial institution?
You want me to? Yeah. Okay. Look, I guess it's a very interesting point that you're raising, David. So what I'm hearing is when it comes to topic of innovation, and I shouldn't say this, but the funny thing is everyone says, I have an innovation unit, I have innovation lead, I have lots of ideas in the company, so I'm done. But what's not working is the execution of innovation. So most of the time when I interact in saying with my clients, the common challenge is I have a great idea or I have a set of great ideas. How do I execute it? So in my view, there are two angles to this problem. So the first one is what we call as inside out and outside in innovation angles. So the inside out is it's given that anything that you are doing in your product, services, solutions, you have to keep innovating, which is continuous process, and you have to do it, and it is inbuilt, and it should be your culture. And then it becomes outside in, and that is where we look at the new business model. That's where we look at fintech. That's where we look at the ecosystem, which is bringing things that you are not good at. I think organizations are realizing that there is no point in doing things that I'm not good at, but rather I would go with whoever is the expert. So innovation is not about technology. I think it's about organization culture. It takes longer than expected, especially in the traditional organization, primarily to scale up. So, and if you go back to what you said about blurring of industries, so it's obvious that whoever is demonstrating the agility and speed in innovating new things will lead the market. So it doesn't matter which industry they come from, as long as they are fast and they're agile. Thank you.
Thank you. Do we have time for a question for the public? We have 2 minutes for maybe one question. Yes, please.
were talking about trust. You were talking about trust. You were talking about the fact that flows are imbalanced between regions. But at the end of the day, if Euler Hermes doesn't give the agreement to say, okay, I can finance this, or if a private bank doesn't say, I'm going to finance them, it will never change. So at the end, everything is matter of fact. But how do the banks react to what you say?
And this question is directed at which panel member?
Yes.
Okay. We have 1 minute, but...
Okay, well, I think you're absolutely right. Finance and risk are intrinsically linked. What is finance about? At the end of the day, finance is about projecting yourself in time and space. That's the best tool we have found, basically, to anticipate the future and to work across border. And of course, there is a risk there. And that's the whole theory of finance. How do you discount the risk, etc.? So that's absolutely central. And this is something that has been polluted, let me put it this way, in the way to the crisis. This is something where we have lost control. We had the feeling, as André said, that the new system put together was the best risk allocation system we could find. And the reality is that it didn't work. So we really have to come back to the basics and really see, okay, what are the risks that we are taking? How do we measure them? How do we disclose them? And so on and so forth. And we have to think hard about this. It's central. It's really central. The risk is, if I may use this word, the risk is it becomes something too related to regulation, and in that sense, you become risk adverse by construction, too compliant. So you don't do things because you think, oh, there is too much of a risk there, and then it becomes too bureaucratic, too compliant, etc. And then you totally break the system, you stop the system, and that's the risk that we are facing today. People are too nervous by what has happened before, so they don't want to move forward now. And that might be a risk for innovation. That might be a risk for different things. Let me consider a very interesting thing on which I've been working at the World Bank called correspondent banking. I don't know if you're familiar with that in the room. It's very interesting. Correspondent banking is basically you have 15 large banks, including Société Générale, BNP Paribas, JP Morgan, CD, etc., which are basically connecting thousands of banks all over the world. I mean, it's not very expensive. It's really the pipes that connect the banks to the different markets. The problem is, with the recent, in particular, sanctions from the US, a number of banks are very reluctant to onboard banks in regions, I mean, if I be very simplistic, like Yemen or Somalia, etc. So they say, oh, I don't want to take this risk anymore. And they just make the decision to cut short and say, okay, I'm not dealing with these people anymore. And at the end of the day, you have some certain regions in the world which are just cut off. So that's probably too much of risk aversion process and too much of a compliance risk. So that's part of the rethinking or the resetting of the system that we have to undertake. We cannot move from a system which was too free, in a way. This is really the ethical error, I would say, of the 1970s, 1980s. Everything was okay. Light touch regulation, open markets, open everything, to something which might be too rigid as a reaction. And that's really where I'm nervous now. So we have to find the right balance between these two approaches.
This is exactly the question I wanted. Now, because I try to respond to this question, because for me, this is one of the big problems. And it is about risk management. And we are doing our best to do that, for example, in our company. And, you know, when you talk about risk, it is a story of chicken egg. So the story is, do you have business? Business help you to grow also. So it is a common partnership, because if you want to grow, we need business. This is why I said that it's not the end of the world. We are still growing. We are still doing business. The question is that if you have a higher risk environment, you need also to assess the risk. We are business also. We gain money from that. And you are business also. We need to secure your transaction. So, for example, when we want to go to a country, we need also to know the risk in the country. And this is what we do at Euler. For example, what we do macro risk, we do sector risk, and we do buyer risk. If the buyer risk is okay, then we'll lend. The problem is that sometimes people don't understand that also there is a risk. And this is also something this is why I talked about awareness. We need to build awareness about the risk, because this also helps the business. Because then this can also help the business to shy away when there is too much risk. This doesn't mean that we don't take risk.
And just to confirm that in our cluster, risk management is one of the key topics, with some French fintech developing specific solutions on this question, on these issues.
So there is a very beautiful saying in French. It's, nothing is genuine except for dreams and adoration. So I think we have to continue to dream and adore finance, and that has, as we panel say, that we have to restore trust. There should be collaboration, the right ecosystem, lending going to the right place, to the right people, and we need to have using technology to have a mass weapon for consumption in order for the world to grow and create employment and growth. So with that, I would like to thank my panel, Mr. Bertrand, Badré, Professor André Cartapanis, Mr. Muhammad Islam, and Mr. Sudhir Pai, and Mr. Alain Pithon. So let's put our hands together and thank them for a very exciting panel. Thank you very much.
Thank you, gentlemen.